Every time I sit down to film one of these, I have the same little voice saying maybe I should wait until it's perfect, and it's annoying. But the truth is, that's not how any of this works. What really matters is showing up, even when it's messy, even when the story is still unfolding. Because for me, what's unfolding right now in finance, especially around Ripple, feels like one of those moments most people won't understand until it's unfortunately already over. And if you've ever wondered how terms like tokenized deposits or unlocking trapped capital actually translate into real world money movement, this is the episode that finally makes it click. Because this isn't just another headline, it's one of the biggest quiet moves in corporate finance. And it's already happening underneath all the noise. When the headline first dropped, Ripple acquires GTreasury for $1 billion, I paused. It sounded massive. But what did it actually mean? For most people, they've already moved on from this headline days ago. But the truth of this deal isn't the headline itself. It's in what happens quietly underneath it. I opened the GTreasury website a few days ago and was instantly lost in CFO language like cash visibility, forecasting, netting, risk management. It felt like a different world. But one phrase stopped me in my tracks. Achieve the clarity to act with total control of your treasury operations. That line hit me because clarity, real clarity, has been Ripple's story from the very beginning. Clarity in regulation, clarity in how value moves, and clarity in how old systems connect to new ones. So I started to dig in, and what I found changed how I saw the entire deal. If you caught this week's earlier episode about Amazon, you'll remember we talked about how the biggest moves don't always make the most noise. They build quietly. This one is another example. It's not about hype or quick price moves. It's about structure and who's quietly rebuilding it. GTreasury isn't a flashy startup. It's actually a company with over 30 years of experience helping major corporations manage their money. You can think of it as like a cockpit where a CFO or a chief financial officer sits in order to see everything, every account, every currency, every balance, how much cash they'll need next week or next quarter, which risk could hit them, foreign exchange, interest rates, debt exposure, and how to move funds between banks and business units efficiently. They already work with American Airlines, Goodyear, and the maker of Arm& Hammer products. And these are just a few. GTreasury serves over 1,000 corporations, connects to 13,000 banks, and handles around $12.5 trillion in payments every year. It's the brain that knows where every dollar is. And to understand Ripple's move, picture how money moves right now. Say a company in the US, paying a supplier in Asia, still travels through a maze of banks, clearinghouses, and systems like Swift. Each step or stop adds time, it adds fees, and manual checks. It's reliable, but also slow, like mailing a letter. Ripple's vision replaces that maze with one digital track. Money or tokens that represent money move instantly, 24/7, across a shared ledger. No weekends, no waiting for confirmations. Old rails are postal mail. New rails, however, are instant messaging for money. And that's where GTreasury fits in. They already give CFOs the dashboard to see every single dollar. Ripple's rails give them the ability to move those dollars instantly on the same screen. On October 16, 2025, Ripple announced it would acquire GTreasury for roughly $1 billion. This is pending regulatory approval. On paper, that's a huge number. And in practice, I think it's a bridge connecting the infrastructure that manages corporate money with the infrastructure that's about to modernize that same system. By combining Ripple's blockchain systems with GTreasury's network, the two companies can help each other unlock trapped capital. And what that really means is this. Most large corporations have money scattered across dozens of accounts and currencies. It's cash that just sits there, waiting for payments to clear or systems to sync. By introducing tokenized deposits and stablecoins, the idle cash suddenly becomes usable. It can move instantly. It can earn yield. It can also fund operations in real time without waiting for banking hours or international wires. And that's exactly why Ripple acquiring GTreasury matters, in my opinion. Ripple has already built the plumbing for instant settlement. GTreasury manages the pipes that big companies use every day to move and track their money. Put the two together, and you get a system where liquidity isn't just managed anymore, it's actually alive. The ability to enable real-time global payments, transactions that settle in seconds, not days, with total transparency. The ability to combine visibility and velocity simultaneously, where CFOs finally have a single window to see and move liquidity worldwide. Ripple's president, Monica Long, even said recently, being able to unlock trillions of dollars in trapped capital for corporates is huge and exciting. And you know what? I think she's right. Because what this really unlocks isn't just capital, it's clarity. If a company were, say, a body, GTreasury is the brain that tracks every signal. Ripple just connected faster nerves to that brain. But there is a deeper story here also that I think almost no one is talking about. Treasurers, the quiet, cautious professionals who control corporate cash. They are about to become the next gatekeepers of blockchain adoption. They are the ones who decide when and how their companies experiment with tokenized money. And if Ripple can earn their trust, blockchain adoption won't start with retail traders. It will start in boardrooms. That's where real transformation begins. For Ripple, this deal changes everything. First, reach. Direct access to Fortune-level treasury teams. Second, adoption. Every company that tests stablecoins or tokenized deposits bring real value onto Ripple's network. Third, diversification. Ripple is no longer just a payment company. It's now a full stack financial infrastructure provider. This is Ripple scaling from bridge currency to corporate backbone. Still, nothing about this is easy, and integration takes time. Connecting blockchain to legacy systems has to be flawless. Treasurers move slowly. They test before they trust. Regulation is still forming. Stablecoin laws, tokenized asset frameworks, all in motion. And competition will be fierce because legacy software vendors and banks will adapt fast. But if there's one thing Ripple has already proven, it's patience. And that's exactly what kind of evolution this requires. This isn't just a billion-dollar purchase, in my opinion. It's actually a merger between traditional finance and digital infrastructure. For the first time, the same systems that track corporate cash will soon be able to move it instantly, securely, and across borders. This isn't hype. That's the plumbing of a new financial era being built beneath the headlines. And as we've seen with Walmart's OnePay rollout and Amazon's early Ripple talks, companies aren't jumping all in. They're testing small pieces, quietly. That's how big shifts happen, gradually, then suddenly. GTreasury's mission was to give CFOs clarity to act. Ripple's mission has always been to bring clarity to crypto. And maybe that's the real story here. That clarity, whether in law or in ledgers, is what finally lets the world move again. This is Layer 1 by James Harris. If this helped you see the deeper shift beneath the noise, share it with someone who is still stuck with the headlines. Or like, subscribe, and pass it on. And I'll see you next week as we unpack another quiet move shaping the future of finance. Have a great weekend, and thank you for joining me.